Hi, I'm Byron Udell, founder and CEO of AccuQuote. Let's talk about life insurance. That's why you're watching this video, right? You saw the catchy title, you know you need it, but you're not quite sure where to start or who to trust. So here we are. This is about a 10-minute video. No pressure, no specific sales pitch, just valuable information. Did you know that half of all Americans have no life insurance? None. People just like you with spouses and children. Now, to a guy like me, that sounds crazy. Think about it. When you die, what'll happen to your family? Will they be able to keep the house? How are they going to pay the bills? Because those aren't going to stop. And have you seen what it costs to send just one kid to college lately? If you don't have an answer, you need life insurance. The good news is that life insurance is now more affordable than ever. Term life policies, for example, cost only a third of what they did just 20 years ago. There's no other product that does what life insurance does. It turns pennies into dollars, and it does so at the exact moment it's needed most. I know what you may be thinking. How do I know that I'm not going to get ripped off? How do I know that I'm getting the best bang for my buck with my policy? How do I make sure I'm not buying too much or too little? And you may have other questions too. So listen up. I'm going to give you the 10 most important things to know when you're considering buying life insurance. This is the exact same advice I'd give you if you were my brother or my sister. I've been doing this for 30 years and I know how this industry works. I also know the mistakes people tend to make, and I'm going to do my best to boil down 30 years of experience into a 10-minute video. I absolutely promise that the information I'm going to share with you right here, right now, will be valuable regardless of where you buy your life insurance. Of course, I'm hoping that if you find the information useful, that you'll give AccuQuote a shot to earn your business. It's how we make our living. So hit the pause button, grab a pen and paper, and let's begin. The most important thing you absolutely need to get right the first time is to make sure the face amount, the death benefit that'll be paid to your family when you die, accurately reflects the economic value of your life. Life insurance absolutely cannot replace a father, a mother, a wife, or a husband. But it can, if you let it, replace the economic value of a human life. Remember, when you die, and you will die, this death benefit check is the last check your family will receive from you. You better make sure it's the right amount or they'll be screwed. So how do you figure that out? Well, think about this question. If I agreed to write you a check for the death benefit of all the life insurance you own or are preparing to buy, would you agree to work the rest of your life for no pay? If not, you probably don't have enough. If you're saying, where do I pick up that check? Well, then maybe you do have the right amount. The rules of thumb, like 10 times income, 20 times income, simply don't work very well. Sure, you can use one of the online needs calculators like the one on our website. There's lots of them, and they're okay, but none of them are perfect. It's not an exact science. Personally, I've always erred in favor of a little more coverage. Not having enough is not a mistake I'm willing to make. If you die with too little coverage, there's no second chance to say, hey, next time I die, I'm going to have the right amount. Meanwhile, your kids are screwed. Second, make sure that any policy you're considering is not designed to expire before you're done needing it. For instance, a 10-year term policy may be real cheap, but if it expires in 10 years before you die and before you're done needing life insurance, and you're stuck going back into the insurance market looking for coverage, possibly without the good health you have today, well, that's not smart, because you may not be able to get a new policy. So we generally recommend that folks look at longer terms, which cost a little more but are well worth it. Remember, you can leave whenever you want, but the insurance company can't, and they can't raise your premiums until the level period has expired. Bottom line, 20 and 30-year terms are way safer for you than 10-year terms. When you're shopping around, insist on only looking at prices from life insurance companies that have a rating of A or better from A&M Best, the oldest and most respected firm that rates insurance companies on financial strength and claims paying ability. Remember, life insurance is a promise to pay. And as my dad always told me, a promise is only as good as the maker. If you only compare rates from legitimate, highly rated brand names you trust when you do make your final selection, you won't lose any sleep wondering who the heck is insuring my life, Fred's Life of Tuscaloosa? Let's hope not. If you're considering a term life policy, ask the agent to explain exactly how the convertibility provision works. When does it expire, and what can you convert to if you ever need to? Ideally, convertibility should last the entire level term period, or at least to age 65 or longer. This may never matter, but if your health changes down the road, the ability to convert the policy to a permanent policy may be the difference between you being able to keep your coverage or maybe having no choice but to cancel when the term expires. If you're not healthy when the term expires, typically 10 or 20 years from now, without convertibility, you're going to be up the creek without a paddle. If in the future you're not healthy enough to qualify for a new policy, the conversion privilege is a godsend. You got to trust me on this one. Remember, life insurance companies make their money on people who drop their policies prior to dying. If you're still alive at the end of your term, the insurance company is happy. They get to keep all your money and pay you nothing. But if at the end of the term, rather than walk away, you convert your policy to a permanent policy, it won't run out until you die. And when that happens, your family will get a check for the policy face amount, tax-free. That's how you win the game of life insurance. Just 6 little words. Die with your policy in force. And as you obviously know, we all die. But you'd be surprised how many people don't die with their policies in force. So many people drop their life insurance before they die for a whole raft of reasons. And when that happens, they've lost the game of life insurance. You might want to check out whether the policy you're considering is available with a return of premium or ROP feature. An ROP provision means that even if you don't die, at the end of a specified period, usually 30 years on an ROP term policy, you receive a full refund of 100% of the premiums you paid into it, assuming, of course, that you're still alive and your policy is still in force. So what's the catch? Well, ROP plans do cost more than regular term policies, but as I've described, they cost more because they do more. And if you cancel them before the 30 years is up, you don't get a full refund of all your premiums. So don't buy one of these unless you plan to keep it for the full 30 years. We're also beginning to see permanent policies with return of premium guarantees built in. They're definitely worth looking at because in the permanent insurance arena, the ROP features don't add any cost. Some companies offer them while others don't. Whatever policy you buy, term, UL, or anything else, make sure that your premium and your death benefit is fully guaranteed. This is really important. There are policies out there marketed as level term, but they don't guarantee the premiums will remain level. They're just projected to remain level. And if they're not guaranteed, just take a pass. There's no reason to give a multi-billion-dollar company the contractual right to screw you down the road. This is especially critical on universal life policies. If the premiums and death benefits aren't fully guaranteed, and you can tell that by looking only at the columns with the word guaranteed above them, then you're just asking for trouble. There's absolutely no accountability for the non-guaranteed assumptions in a life insurance illustration. Ask what is guaranteed and make your decision based on that, not based on some pie-in-the-sky assumptions as to interest rate or market rate performance or anything else. As for rate classifications that determine your pricing, keep in mind that the lowest rate you can get is Preferred Plus, and that rate only goes to the healthiest customers. Some people just can't qualify for those rates. But hey, Preferred is still pretty damn good. The third best rate category is Standard Plus, and the fourth is Standard. If you have any significant health issues, you might have to pay an additional risk premium above and beyond Standard. These are called rated policies. What's important to remember about all these rate classifications is that different insurance companies can come up with different underwriting opinions on the same person. Just because you're offered a rated policy, translation expensive policy at one company, doesn't mean you can't do better at a different company. Remember that quotes are just quotes. They're nothing more than guesses as to what your ultimate rate will be. That decision is made by the insurance company after a thorough evaluation process called underwriting. If you're a diabetic smoker with a history of cancer and some numbskull agent quotes you preferred plus rates, politely exit the conversation and find a new agent. Those rates will never be delivered, and your time is being wasted by someone who doesn't know what the heck they're doing. That agent is either incompetent or worse, dishonest. So comparing quotes, while it may seem like the smart thing to do and the responsible thing to do, can turn out to be a wild goose chase, unless of course you're dealing with honest people that know what they're doing. Even then, the quotes are just guesses, but at least at that point, they're educated guesses. Now, for the most important thing to remember if you want to compare the best rates in life insurance. Make sure you're talking to a broker like AccuQuote that handles lots of insurance companies, not just one. If the agent you're speaking with has a business card with the name of one insurance company on it, you can bet that he or she is going to pitch you on that company's products, even if they don't represent the best values in the marketplace. That's his or her job. At AccuQuote, we represent dozens of the top-rated brand name life insurance companies you know and trust. Since 1986, we've helped millions of people save a fortune on their life insurance, and we'd really like to help you too. If you'd like more information or help on comparing policies, just call us at the number on your screen or go to AccuQuote.com. We promise to make this as easy as possible for you. I'm Byron Udell, and I hope these tips were helpful. Thanks so much for listening.